everyone, let's talk about recent widespread attention on Canada's real estate market crash. Let's first analyze two main questions. Is Canada's housing market going to crash? Second, will housing price in Canada decline? First question, according to recent reports, the Canadian real estate market, after the period of stagnation, is now showing signs of recovery. Royal predicts that with the third consecutive rate cut, the market may enter a recovery phase by the spring of 2025. Furthermore, TD Bank economist points out that the recent rate cuts and new federal mortgage policy will likely attract more buyers. These factors suggest that a market crash is less likely. In fact, a new phase of growth could also be on the horizon. Let's further analyze whether Canada's housing market might indeed crash. A housing market crash typically refers to a rapid, significant drop in home prices, often accompanied by widespread loan defaults and market panic. While there are still uncertainties around whether Canada's housing market will crash, even with downward pressures on prices, factors like Canada's economic stability, immigration policies, and labor market resilience could also help mitigate the risk of a crash. However, some factors are indeed adding pressure to the market. First, rising interest rate. The Bank of Canada has raised rates multiple times, increasing mortgage costs and dampening demand. Many homeowners with variable rate mortgages are seeing monthly repayment rise, and some may be forced to sell, increasing supply in the market. Second, decreasing affordability. The dual impact of high home prices and high interest rates is making it harder for most people to afford homes, reducing buyer demand. For example, prices in major cities like Vancouver and Toronto are already putting tremendous pressure on middle-income households. Third, government regulatory policies. Over the past few years, the Canadian government has implemented policies like mortgage stress tests and vacancy taxes to curb housing price growth. These measures may have limited speculative buying, thus cooling the market. Second, although pricing in some areas have adjusted recently, overall Canadian housing prices have not dropped significantly. In fact, with market recovery and rising demand, prices may even trend upward. Royal Page reports that national home prices rose 1.6% year-over-year in Q3 of 2024, with Q4 prices expected to remain stable. Moreover, new federal mortgage policies such as extended loan terms and high insurable price caps could stimulate demand, providing price support. In summary, given current economic policy and market trends, the risk of Canadian house market crash appears low, and a significant price decline is unlikely. Instead, prices may steadily increase as the market recovers, while views on whether Canada's housing market will crash or prices will fall vary widely. Some indications suggest downward pressure on the market. Now let's examine whether Canadian housing prices will decline in the short term. Given the current environment, Canadian housing prices could see some degree of decline, but the extent and duration remain uncertain. Several factors could contribute to potential price correction. First, increase in new home supply. Many developers accelerated construction during the recent housing boom, which may lead to a rise in new home supply in some regions, potentially putting downward pressure on prices. Second, shifts in immigration and demand. While immigration policy have driven Canada's population growth, new immigrant housing demand may focus on rentals, especially given increasing rent affordability challenges. This may offer only limited support for the home buying market in the short term. Third, economic slowdown and employment risks. As global economic growth slows and certain sectors like technology and resources face job market pressures, some households' ability to repay mortgage may weaken, leading to more properties entering to the market. For instance, if unemployment rises in resource-dependent provinces like Alberta, housing prices may be more significantly affected. Summary: while Canada's housing market may face short-term downward pressure, particularly with high interest rates and slow economic growth, whether this constitutes a crash depends on future interest rate adjustment and the pace of economic recovery. Yes, Canada's real estate market, while unlikely to crash in the short term, does face some longer-term risk and vulnerability. First, high debt level. Canadian households carry relatively high level of debt, especially in major cities, with years of rapid price growth. Mortgage balances for many households are high. Increasing debt repayment pressure. Should rates continue to rise in the coming years, some borrowers may struggle to make payments, potentially leading to defaults. Second, housing price bubble. Housing prices in some Canadian cities have consistently been very high than income growth for years. If prices adjust in the future, this bubble collapse could impact the financial and economic stability. Summary. While Canada's housing market may face short-term downward pressure, particularly with high interest rates and slow economic growth, whether this constitutes a crash depends on future interest rate adjustment and the pace of economic recovery. Yes, Canada's real estate market, while unlikely to crash in the short term, does face some longer-term risk and vulnerability. First, high debt level. Canadian households carry relatively high level of debt, especially in major cities, with years of rapid price growth. Mortgage balances for many households are high, increasing debt repayment pressure. Should rates continue to rise in the coming years, some borrowers may struggle to make payments, potentially leading to defaults. Second, housing price bubble. Housing prices in some Canadian cities have consistently been very high than income growth for years. If prices adjust in the future, this bubble collapse could impact the financial and economic stability.